All right. Well, it is exactly 1:31 now. I thought I was going to be right on the number. Good afternoon, everyone. Welcome to the PUG meeting for the week, or the month, excuse me, for the week of September. It is the, what's today? The 9th. It's been the 9th all day. Unbelievable price action. Unprecedented price moves. It's incredible. But I mean, we only had about a 400 up day in the Dow today. No biggie. Is this? I love the question. Some engagements that we have from clients in our main trading room. Could this be a dead cat bounce? The market was up this morning, originally at around 1.2 or 1.3% in the S&Ps, and then we got up to around 1.8 and then 2, and it was like a 2% move in the S&Ps at this valuation level is not your normal dead cat bounce unless you have a lion and call it a cat and attach maybe a couple 100-pound weights and then throw it on top of a trampoline. It's a hell of a bounce, right? This, again, because of the volatility, it doesn't mean that we could be out of the woods on downdrafts. So we're going to explore a couple things of indicators that are on Person's TradeStation platform, and I always like to integrate it with other platforms because the indicators, whether it's with usually we do PUG, Person's user group, it's the user group of Person's indicators. So whether it's HDSI, TradeStation, Thinkorswim, Genesis, it's all good. We had a few questions that are more in and I want to not call anyone out on this, so I'm going to say there are a few questions that are more proprietary questions in nature, which I would never answer. So don't feel offended if I don't get to your question, such as what are the moving averages and the settings, what makes the PPS indicator work. That's proprietary information, and it's a momentum indicator on price. So I'll cover it that way just to be forthright. Proprietary is a word that means it's. I used to be rude about it and say none your business, but I became a little nicer in my older age. Sometimes some people accuse me of that, and more professional and just say they're proprietary, they're secret. One reason is we don't want them out. I don't want everyone to have them. Number one, I don't want to share it with the world. I don't want it bastardized. I don't want it retaught. I don't want it stolen. I don't want it to be reclaimed by someone else, and I keep it close to my heart, and that's why we don't really go out to the world and market it. It's available only on a few platforms, a handful, and Thinkorswim is one, which will be now soon. I'm not sure if it's going to be called Fidelity, but for those that are interested, it is available there. And I will share that with you in just a moment. I really didn't have, to be truthful, I didn't, because of the holiday, and again, everyone needs a holiday, and I work almost 6 days a week, as many of you know, with the advisory service, doing scans, managing or trying to manage a fund extremely successfully in this incredible environment. Position sizing is a very important, integral part of, and then when people have given me their retirement funds, not their gamble money, retirement funds, I treat it with kid gloves. So it does require a little bit of my time, running a trading room as well. So forgive me if I didn't prepare as well as I normally would have on this one, but I wasn't expecting to see the kind of volatility that we've had over the last couple days. So therefore, I hope you forgive me for that. We have a question here, and it would take me a second to read it through, and it's about, so while I read it through, let's do this. Read the risk disclosure with your microscopic lenses. Time to tell. GP volume bars. How big is it? How small is it? So what is this? Entering trade based on higher probability of success criteria many divergence. All right. Well, I can talk about divergences. Okay. I'll go there. So let's take a look at something. Yeah. So the person that asked the question about the data window, no, I don't use the data window. I use the histogram on a visualization. We could probably get that down and program that. You have a picture and you've answered your own question if you read what you gave me and sent me. When a market gives you a buy signal and you get an uptick, and you can start to see when you start to show a downtick, the market went down, your trend is starting to exhaust itself. The histogram is a very strong component, and oftentimes, if I've covered in many of the PUG meetings, so go back and review these meetings, and you can go through these meetings yourself. We record them and look at about the histogram. We've given a lot of information on that. So we had another question about scans and how to customize a scan, so I'm going to go through that. So let's try to get rocking and rolling. Let me just also point out to you, for those that are VIP club members, the volume indicator is available as a VIP. The PMC indicator is available. The TSI, the multiple time frame, which lines up, and you can program this whether you want to see, is the market in a 5-minute and a 15-minute buy? Is the market in a 60-minute daily buy? And the TSI is a multiple time frame indicator. The Trilogy scan, the bullish and LCC radar screen, the HCD on the radar screen, the McClellan breadth indicator, and there's about 4 others that I haven't had a chance to update. But I did want to point out to you, I've been talking about this a lot because it's one of my personal observations. It's also a statistic that I discovered and published and wrote about approximately 17 years ago. And it's looking at the probability. Why do I look at the first hour? Why do I look at, more importantly, maybe the first 78 minutes of the day? And I will share this information with you. If you look at the range and look at any bar and look at an indicator or any market that's established in a trend. For this, I'm just going to kind of look at, we'll take a look at I don't know, you got 9 choices on your screen. Name something. Uber, VXX, something. Name something. Type something in, somebody. What do you want me to look at? Let's look at something. And then that way I won't be accused of cherry picking for that reason. Oh, you guys are too much. Who should I go with? Let's review. We've got ES, VXX, Uber, VXX, Diamonds, VXX, 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 NQ, VXX, VXX, ES, Amazon. You are not getting the messages, question mark. No, I am getting the messages. I just decided I didn't know who I wanted to read. Everyone answered VXX. So no offense, the VXXers win. All right. I'll do a couple of them. How's that? All right. Sample of time, recent history. My analysis suggested 67% of the time. And then someone recently in the room back tested me and said, I think they said it was like 71%. But either way, let's just round down and say 67. Let's better yet, let's even round down even more and say 65%. And the rule states this: 65% of the time, the high or low of the range is made in the first 20% of the time of the time frame, so to speak. So again, if there's 6.5 hours to the day, within the first hour or 78 minutes, what's 20% of 6.5 hours? 78 minutes. So the first 78 minutes of the day, 67% of the time will mark the high and low of the day. Pretty neat statistics. It's good odds, right? So if the market opens and here we're going to look at just looking to see how the market is, and then I can change this on I can customize this, I believe. I can even do it to, let's see. Let's see if I can do it this way. 78 should be 78 minutes. So, let's see if I did that correctly. I think I did that pretty correctly. So 78% of the time, excuse me, the first 78 minutes of the day will mark the high and the low of the day. So here is your, like, we'll start from the get-go. Market opens, and until the end of the day, the actual high of the day is finally taken out. Usually speaking, the high or the low is made in the first 78 minutes. This did not work. Next session, the first 78 minutes of the day, after it's concluded, marks the high or the low of the day. If the market takes out the high, you can generally assume that the low of the day is taken out. So again, this is one that actually worked. Here's one that the high or low. The high within probably the next few minutes almost marked the high of the day. The next bar almost marked the high of the day. The next bar marked the low of the day. The next bar marked the low of the day. The next bar, first 20% of the time frame, marked the low of the day. The next time didn't work. The next time, high or low, it worked. The next time almost worked, but we would say officially it didn't. It took out the high of the day, but it took out the high of the day by penny. So again, the first 70% of the time, you're going to be right, knowing that the high or the low is made within the first 20% of the time frame of the market. Now, let me take this a step further. Is that pretty clear on what the rule states? Now, for the ES, this is a little bit more trickier because you could define the first 78 time periods of what? 24-hour session. 20% of the 23-hour time period is not your first hour of the day, is it now, gang? So think what you're asking. I said 20% of the time. So if you're looking at a market like the E-mini S&Ps and you're asking, hey, the first hour of the day didn't work. Well, the market opens at 6 p.m. and closes at 5 p.m. And there's a few minutes in between at 4:15 Eastern time. The market kind of settles back for settlement purposes. So again, what is your time frame that might mark the high or the low for the first 20% of the time? So if we change this over to a daily chart, for example, if you believe in open close relationships are important, right? And this is more like a seminar information, but if you believe that the open close, again, markets sometimes open lower, trade higher, and then you get a green candle, all right? And that means the market closed greater than the open. So if the market opens in the first hour, it tinkles around and then starts to trade higher, you have the assumption that within the first 20% of the time frame after the market opens, the low might be in for the day. There are exceptions. There are exceptions in volatile periods of time, obviously, but your odds that you have 20% of the time, the high or low for the day for an intraday trader and the high or low for the week for a swing trader might be made within the first day of a 5-day. What's 20% of the week? Monday, 1 day. So again, looking at the market in terms of what's another statistical edge, in thinking in terms of, gee, is the market closing greater than the opening range on a daily basis? I might look at the open close relationship. If it's a green candle, it helps you to discover the market's up. It doesn't work every time, but almost a 67% statistical odd in your favor helps give you at least managing what direction or which signal you want to take. All right. So now let's take a look at comparing if I had two different charts, and I'm not going to do that right now because this is more seminar material, but I wanted to just include this because I've been talking about it a lot in the room. One of my favorite times that I look at is, and we've done this live in front of you guys in the live trading room, specifically April. Great calls. instead of a lot of people saying the market was going to retest the low in March, we said, no, no, no. The advanced decline, and statistically speaking, odds are the low for the month might be in if the market trades after the first 5 days of the month a greater than its monthly opening range. And if it opens and establishes a low and then trades and closes greater than its open range of the month after the first 5 days, what's 20% of the month? About 5 days. So if you close greater than the opening range after opening, trading lower, and then closing back through and above on a daily basis, you statistically have a better odd of success, or at least improve your odds that the potential low for the month might be in. Are we pretty clear on that? Did I describe that adequately? I'm sure some of you have heard me mention it many, many times. So if you look at the open close relationship, wow, it might not be perfect, but let's say the market opens, trades down, and comes back and closes greater than where it started the open. It might signify that the market is now the low for the month might be in. And that's what we had over here in April. The market opened, traded lower, and I said if a daily basis the market comes back and closes after the first 5 days above the opening range, the odds are that the low for the month is in. That was, a very helpful statistic at that point, and it was not lucky. Okay, so now what we would look for is the same thing on the opposite side of this game. So in the ES, while the market is down after the first 5 days, we've actually closed on a monthly basis after the first 5 days. We closed below the open. So perhaps the high for the month is in. That doesn't mean we can't trade off the low, go up, go back, go forth. But the odds are 67% chance. The odds are that the high for the month is in. So that is one of the statistics, and I'm not going to cover any more material. You could figure out the math. Jerome, you asked a question. How many trading days? And maybe I wasn't clear. Trading days. So I'm not being rude. I'm trying to get you to think for yourself. And that's part of the market. You got to think before you ask sometimes. Think about that, right? It's a good question. I don't mean to beat you up. It's a great question. But think about this. On a holiday, what did I say? 20% of the time is first 5 trading days. Within the first 5 trading days, what did we have this week? We had Tuesday was September 1st. Wednesday was the second day. Thursday. So the market opened Tuesday. So you had all day Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday. Apollonia, Godfather. I speak English. Then you had what? Monday was off. Tuesday. What's today? Wednesday. How many trading days are we into the month right now? 1, 2, 4. How many? Last I count, it's the 6th trading day of the month. So actually yesterday, even with the holiday, as of the clues, and so in the newsletter, didn't I said I'd given an extra day, Wednesday. This is also, I don't know, it's kind of a gray matter, because here's another thing, gang. It's a statistic. It's an edge. It's not, is it a guarantee? Is anything in this world a guarantee? 67% is good, but it ain't a guarantee. But what constitutes a bull market? The market closes greater than the open. What constitutes a correction? Market closes below the open. What are the conditions of the market? Seasonally, September could be rocky going into October. We've had a good run. Who's to say that the market's still not bullish and it rotates, but it just the high for the month is in? Now, what good would that knowledge do for you? The high of the month is in. What good would that information do for you? Let's review. Option traders. We know that we have the rest of the month. It just started. If the odds suggest that right now we had a daily close below, and let's do this, SPY. Let's change the symbol up. So I hope you appreciate my tough love approach. I wanted you to think this for yourself so that you can calculate the answer. So then that way you don't make mistakes that could cost you money. This is not a market that you get like, oh, in this environment, if you make mistakes because I didn't explain it correctly or you didn't comprehend it and you didn't pressure me to answer the question further and you didn't get it, it may cost you money. And I don't want that to happen. So again, look at the SPY. And what is my other thing that I always get hung up on with a lot of times that you hear in my seminars and things of that nature, especially when we're trading like and kind markets. If you have a ETF such as SPY, but you have it and only trades pretty much 16 hours a day or 14 hours a day, whatever it is, but the ES trades 20 or 23 hours a day, more or less. The point being is you can sometimes get a pattern or indicators on the S&P and get a signal on the S&Ps that won't show up on the SPY and vice versa. So when it comes to crude oil, USO, SPY, ES, NASDAQ, the Qs, gold, GLD, you can take a look at the underlying futures and take a look at the ETF and see what the patterns are. So at this point, I practiced what I preach. I looked at the spider and I'm looking at the ES. We have right now, we are below the monthly opening range and it's the 6th trading day. The odds suggest the high for the month is in. That's what the odds say. And that's all it says for us. What does that information do for you? It says that on rallies, maybe you could lean against the high and sell upside call premiums. And inversely on individual stocks, let's go there. Individual stocks, if the market is below its opening range, that suggests that possibly the high for the month might be in there. So let's take a look at a couple names. I know everyone's interested in Zoom and Tesla and all that kind of good stuff, right? So the odds that the high for Zoom is in for the month is about 67%. Good statistics. So if the market rallies on a daily basis and you get maybe a 60-minute or a daily sell signal, and we're already in a daily sell mode, let's take a look. We're in a daily sell. So the market went up. Well, your signals suck. I mean, I don't think they suck. It's just this is an unprecedented, stupid, crazy market. So in Zoom, kind of take a look at it when we have a normalized market and we have normal ranges and things are doing all right. The indicators are pretty good. I don't call this blow up in Zoom didn't reinvent the wheel in these 2 days. That's pretty crazy, right? Statistically, the high's in for the month. Now, can we go back up and test that high, a logical spot if we go back up? Let's take a look at the 60-minute chart, by the way. So if the 60-minute chart, we get maybe another upside, we fill the gap in here and the market runs up, let's just say, the odds are that we've established based on a statistic that the high for the month is in. I can start to say when it rallies, if it rallies a little bit more and I get another sell signal, perhaps I can sell as it rallies, maybe some upside calls above that spot. Not hard to figure out. So for me, what I like to look at on TradeStation, when I'm looking at stocks, you always see the way we created TradeStation. We start left and work right. We have our monthly, weekly, daily, 60 minutes. I like to look at the condition of the market, thus the PMC indicator. It tells me the relative strength of the market. Since we started to talk about Zoom, let's take a look at Zoom. It should be in here somewhere. If not, I'll add it real quick. So I can clearly see where did the market open. If you understand a candle, now it would be more helpful probably because I do this by eye, and I always look at a gauge of where did we start. The open is the it's kind of like the gate. It's the beginning. It's the threshold of where did you start, okay? And it's a measuring point. There's 4 parts of a candlestick. There's 4 points of interest on a bar chart. It's called the open, the high, the low, the close. Those 4 elements are important to a degree. In my humble opinion, the close is always the most important because that's where money is assigned, either credited to your account or taken from your account. That's the one that's the close. But we look at the close as it relates to past price action. That is verbatim out of any course or anything I've ever preached. Where's the close in relationship to past price action? So what's past price action mean, John? Past highs, past lows, past opens, past closes, past price action. Those 4 points. It's the relationship which constitutes open-close relationship, which makes up the candle, okay? Or the Renko chart, or a lot of people just, they just want to look at open close. And I can relate to that. If we have a market that looks strong, but yet it's still below its monthly opening range after the first 5 days, is it really strong? And that's one of the things that if we are looking for markets that move, maybe an artificial upside move in Zoom, it pulled back and it came back up. Tesla today, TSLA. We had a little trade set up today in the live trading room based on a 15-minute breakout of a last conditional change. And in fact, you can see it right here on your charts. I could point it out in a heartbeat. That was the 15-minute sell signal right there, the last conditional change. And it was drawn in the room, and I said, that last conditional change, when you close greater than that last conditional change, what's my favorite little breakout strategy, gang? Buy on the close of the next open, stop goes underneath the low of the bar that gets you in, and since you're joining the party kind of late, what do you want to do? You want to do what? Tighten your stop. So almost immediately, there was no pressure when that bar right there broke out to give almost an immediate 1-to-1 risk-reward ratio. It was beautiful. It was a perfect John Person setup. I was saying in the room, we might even be able to, because of that gap, my guess is, at the very least, we should see somewhat of a fill in that gap, a midpoint of the gap. Another little statistical fun thing that I teach is that gaps don't need to be filled 100%. Even just testing the gap, 50% of the gap is something that markets can come in and the gap would be considered filled. It came back, it retested the gap, it filled the hole. A gap is simply from a close to the next day's, from the close to the next day's, let's call it high, that leaves a gap on the charts. Some people would also consider the gap the low of the day. You can see that a little bit more clearer, and you go back up and you fill the gap. My guess is the market's probably going to come back up and could conceivably test into the low 380s right here where it launched up and failed from. It has to maybe do some unfinished business and fill the upside. But 10 to 1 or the other. The point is that if the market has created a short-term opportunity for the upside, where was the monthly opening range? It's way up there. Where is the monthly opening range? It's like up there. Right here. Here's September. That was the first day of the month. This is where it opened. Holy moly. So the market with 501, it probably will come up and try to fill the gap. As the market rallies, and you can take short-term trades, no problem. But from here until the end of the month, odds are the high for Tesla is in. Historic high, I don't know, but the high for the month is in. That was a pretty sizable, what I would call, it's not quite an equal and opposite, but it certainly is. When the month closes, I mean, if you close below the midpoint, it would be called a dark cloud cover. But that doesn't mean we can't go back up and test the midpoint of these ranges. Doesn't mean we can't go up there. It suggests that since it is already past the 5th day of trading, the high for the month is in. So if the market rises, instead of chasing and trying to go long, use advantage of that market rise and use the high or your statistics as either a defensive stop or to understand that that's where your your benchmark level is, that the high is in. All right, so that's how you would do that. And what I like to look for is how many stocks are above or below their monthly opening range after the first 5 days of trading. That sounds reasonable. How many people think that's a reasonable statistic to look for, to scan for? Let me repeat what I said. Is a stock after the first 5 days above or below its open range, monthly open range? How many people think that sounds pretty slick? How many people, put a double Y if you've heard me talk about this before? I actually do. I use it. It's kind of like, since we're getting the most unprecedented volatility. Define volatility. Price movement, price action movement. Today, the spiders, I mean, let's face it, at one point they were up on average, the indexes themselves, I'm talking the SPY, the NASDAQ, the QQQ, they were at one point today, look, Q was up 2.74%. You don't find indexes up, go down, up and down the screen with me here. On average, in the home builder sector, 0.73, 0.89, 1.3, 1.6, 4.48, 1.6. All right, restoration hardware, that's after earnings, 2%, 2%. Do you get the point that I'm trying to? Here's materials, here is energy, going down the list. For the most part, both the indices, the S&P and the Qs, were up on average as much as individual stocks. That doesn't happen often, gang. It really doesn't. That's pretty crazy. So, I mean, I think some of these are after hour market moves, but Amazon up 3.77%. So is that the Qs? But the S&Ps were up today at one point almost 2.5%. So again, the volatility is unprecedented. And so with equities right now moving like they're moving, I want to know, I've got a lot of great tools, as we've discovered, with relative strength helping us. What I like to put out is stocks that are improved relative strength on decent volume. Define decent volume. And there's a good question that you could ask me, John, what do you mean by decent volume? Well, on my radar screen, I have 2 volume columns here that we created for everyone to get that rate of measurement. I want to look at what not today's volume is, but what is the average volume, and hopefully this didn't get changed, and I'll double check. It's 10 days. You can change it to whatever you want. You go 5 days for more sensitive to time changes. Remember, in any time of an average, the less time you have, the more sensitive it is to changes. A 20 period is going to be less sensitive. A 10 period is 2 weeks, half a month. So I want to look at what has been the recent history of volume, whether it's a 3-day holiday weekend, the last 2 weeks of August. What is the recent history of volume? And I use 10 business days. So that's what that would reference, 10 business days. Is today's move greater or less than the 10-day average volume? And that'll tell me, gee, Tapestry, which is Coach in retail, it was down. Volume today was down 3%. Of course, I just picked it because it was right there. It was red and it was the first thing. I could look at Tiffany's, and I could look at Tiffany's. I mean, Tiffany's down 5% on literally a little more than 5 times its 10-day average volume. Wow. So that tells me that's a lot of volume, the condition, and again, big down day, right? Bad earnings. This tells me there's huge liquidation. If the odds are, after the first 5 days of the month, which was today or yesterday, it was yesterday actually, but I mean, that's cheating. So I don't want to do that. That would be considered cherry picking, I think. But the statistics would work for that. any dead cat bounce to come up and fill the gap, you can guarantee that someone's going to be trying to sell this thing and use the high for the month. So what I would like to see is if there's a kind of a nominal change in the market, in the utilities. Like, for example, First Energy. It's such a narrow range market. I mean, the current range for the month is negligible if you look at First Energy. But the first 5 days closed greater than the open range. Statistically speaking, the odds are the low for the month is in. Where is it going to go? That's a different question. It could go nowhere. So I would want to see a little bit more technical work, but I would like to go through and find out how many stocks are above or below on a daily basis after the first 5 trading days, its opening range. Johnson & Johnson closed below its monthly opening range. To make a good presentation to sell the rallies or buy the dips. Odds are sell the rallies. Odds are sell the rally. Why is this probably not a good stock anyway for this current environment? It was up 1.76. It's still in a daily sell mode. It closed below its opening range. It wouldn't get my consideration as a buy. It's in a daily sell. It's in a weekly buy. It's kind of mixed. It's hodgepodge. And it could resort into maybe testing last month's low. That's the thought process that I have. The relative strength, just to share with you how I utilize these tools, the relative strength, the PMC indicator is weakening substantially, had weakened substantially. So Johnson & Johnson, so I don't know, maybe they backed off their COVID-19 program, or I don't know, something happened because they've lost. There's no investment interest. The momentum, according to our histogram, is weakened. The volume is negative, and the relative strength is weakened. Now it's closed below its monthly opening range. I have a statistics. I have something more other than someone telling me, my neighbor, hey, Johnson & Johnson looks good. I have statistical edge against the rest of the world. So this tells me that I would be on the lookout if I was, wanted to sell options. If I'm long that stock, I might want to tighten my stop. These are things that will help me on a given month. And that's one of the things that I would find room here, and we can't. But this is an indicator that I kind of use, and we're actually going to come up with it for you guys, for you PUG members and you VIPs. So just to throw it out there, this is giving you, if you've heard me say this before, if you have the TSI indicator, right, which gives us 2 multiple time frames, how cool would it be to kind of like build something that says, statistically, if it's that relevant, why not have that in our arsenal? And then I can find out, should I be buying the stock or selling the rally? That's the neat thing. And it gives us a little bit, even for day trading, we don't have to look at that too hard for day trading. You don't have to run a scan for that. You're day trading the market. Is the market today greater than the open for the week? Is the market on a 5-minute basis above its opening range? Boy, that might help boost if it opens. So let's take a look here. Let's go back to Tesla, TSLA. Hopefully I didn't lose you with this statistical information. So would you agree that's the open? It opened, it traded lower. And all of a sudden we had found a little bit better of a strategy with the last conditional change breakout, but the market still closed greater than its open. Let's change this over to a daily. So there it is. So what makes a green day? A green day means the market closed greater than the open. So if a market opens, trades lower, and then within 5 minutes, 15 minutes, or after the first hour of the day, closes greater than its opening range, statistically, we might have a better edge in buying the market. And if you look at candlesticks, and if that logic makes sense and you've seen that relationship, you'd say, wow, I kind of like that. That's just for looking at any kind of given market. So the indicators that we've put together in our TradeStation and other packages, almost on a daily basis, I use them myself. I look at the PMC. I look at the histogram. when it's comparing a stock. So let's get the checklist. John, I'm not trading stocks, I'm trading futures. Well, you don't need PMC. Eliminate it. John, I'm looking at the momentum of a particular market. I'm using it on the algo. Okay. So if you're using the volume on the SPY, for example, and I think we did have a question kind of like this about what's the momentum and how can you use it. This is a very choppy road. This compression, this is actually the model that we created. The compression stop kicked in because even back then, this was unprecedented type of volatility in this environment. We've never traded this type of environment before, ever. And I still think that with the way the market's gapping up and gapping down, this kind of crazy thing, and buying, I think maybe especially around a holiday, this still did a great job. It would be nice if it didn't get a compression stop out and it continued to go up, right? It would have been beautiful, but that's not exactly what happens. Look at in reality, there's still a dynamic trading system that's made money. It's given great signals. It did miss this. And it missed this because both indicators, my volume indicator showed there was relatively, no volume in this until it started to sell off. We get this big blow off top on that momentum. The question actually was in the spider, I think, and I think it's showing this exactly right here. I just don't have the histogram for the individual that sent me the question. What is the momentum doing as this generates a buy signal? The histogram is improving. What is the on balance volume doing? And just to be fair, just to cover that real quick, when this generates a buy, that you can clearly see the histogram improving. So it tells me that there's less likely a chance that the market is going to sell off because there's no selling pressure. Actually, the market is the volume histogram is improving at that point in time. I don't see anything relevant with the on balance volume. It's not until it gets later. Then as the market gets a compression stop, all right, I get that. The momentum was weakening. I wouldn't go short, thank God, but I was happy and grateful I made money in the market. Ironically, it didn't generate a short over here. It did generate a nice short over there, and it trailed out. Unfortunately, it got chopped up a couple times. It had a long in here today, and I believe in the trading room, what did I say to you guys? If you're in the algo optimizer and a very similar system strategy, get out at this thing at this last conditional change. You got to, I think in this environment, we've never really traded markets that have this kind of dynamic volatility. Let me ask you a third question. What is the ATR doing in this environment? Let's do this. Insert analysis technique on TradeStation. Let's look for average true range. Let's hit OK. Darn it. This is 14 period. Most trading platforms always have 14 because that was what Wells Wilder defined half a cycle. And what was his cycle? 28 trading days. 28 days. 28 days. In the old days in commodities, that's what he developed this for, was based on commodities. It wasn't based for stocks, by the way. So anyway, another seminar thing. But let's change the input together, and let's go and just use what I like to use as a 10 period. Now, this is for day trading. Let me ask you a question. On SPY, open outcry, 6.5 hours. So 2 days would be what? 13. You could use 14, but I'm using 10 just because I like 10. It's not going to change much. What has the ATR done? As the market went up, ATR was down to flat, and the market rallied. But all of a sudden, we started to see an increase in the ATR. Even though the market is going back down, it's going down with a heightened level of average true range. Does everyone see that? Is that true? relative to where it had been for most of half of August. So the point being is, if the market is supposedly going to be strong, it needs to have a weakening ATR. A higher elevated ATR means there's bigger risk. There's more volatility. The bars are moving. This either means we have to adjust our strategies for that increase in ATR, or let it play out, but observe and throw a little cerebral thought in there that the market conditions has totally changed. Again, very logical ways of looking at the market and making better trading decisions, so you're better prepared for the environment we have. The environment will always change. None of us have kind of gone from one day you're trading in a 50-cent, 75-cent ATR, and the next day you're trading in a $5 ATR. It's pretty crazy. And we're talking on a relative basis of ATR 10 periods on a 60-minute. This is a 60-minute chart, which means that this ATR is based on the 60-minute bars. These are 5 on average. If you're up almost at, what would that number be right here? 4.77. So that means each bar on average is at 4.77 S spider points each hour. That's crazy. So now today we left a 10 period at 2.4. That's still fairly elevated. Higher elevated ATR in equities, or at least with the S&P 500, is more indicative of volatility, higher volatility. Higher volatility means more risk. More risk means people trade less. Market might be succumb to more downside. Doesn't mean that this market is a full-fledged bull. It means it's probably rotating. So I just wanted to point out to you, when we get a market and we look at a couple indicators, do they help you to define, this is our PMC indicator. Market made a new low yesterday, and many of you get the newsletter. You know what I did yesterday? We got out of the put spreads. We were in put spreads. We got out of the put spreads yesterday. Why would I do that? Well, one of the reasons is we were losing the momentum of the market. Is that the right decision? Well, we had a 2.5% move to the upside today at one point. Yeah, I think so. If it looks completely bearish, we'll get more information. But to me, I think that the market is still vulnerable for downside. More stocks that are below its monthly opening range ain't positive. So if you get I think, I don't want to give credit to the wrong person, but for the individual said a dead cat bounce, this wasn't a dead cat, man. This was a lion on a trampoline, I think is how we joked around in the live trading room today. That was unprecedented. And we're going to see that kind of volatility. These indicators are helping to discover a condition of the market. There was less selling pressure at the end of the day. So anyone that got short yesterday probably got stopped out today. That was unbelievable. So anyway, I hope I wanted to go through and just share with you and kind of cover a question that was in my hand, ATR, how we use this stuff and put it together for a trading plan. Is it relevant? Yes. Is it easy? Is this market seem easy to anybody? Well, according to emails and YouTube ads, it's just an easy market, and that's kind of comical because it isn't easy. This market could easily turn around tomorrow. It could be a re-challenge of the highs of an environment. We use other tools like the besides the ATR, we look at advanced decline. Today was one day. One day was good. Look at the advanced decline. Does one day make a determination of the trend of the market? No, we're still in a daily PPS sell mode. True. Could this market rally a couple points, almost form like a bear flag, and then have one more down? Yes. Do I have that kind of insight? No. Did the market turn bullish today? It was a good short-term trade at best. There might be a rotation. What I see is a rotation in other sectors. We'll find out. Stocks that tend to close greater than its opening range after the first 5 trading session tend to point to the low of that time frame is in. Funny thing is, we had a lot of stocks do that, but not the high momentum names. Certainly not a Zoom or a Tesla. They got a long way to go before they do that. The advanced decline analysis here, gang, does not suggest that the market's breaking out any hour soon. This is a McClellan oscillator. And by the way, even though despite the day was good, by the way, if you take a look at that McClellan oscillator, it's still, last I checked, below the zero line. If it crosses back above the zero line, then we have a discussion about, hey, it looks like things are turning. This is the John Person volume indicator. By the way, the last 2 days, why is the volume not pointing up? It's still pointing down. The last time we kind of had that, even over here back in late February, early March, market fell, had a couple really good strong days, and then bang, it succumbed to further weakness. Look at the readings. I mean, line that up. Here's a 2-day rally. Here's a 3rd-day rally. The volume was still fairly negative. No buy signal. There's a buy signal right here, and the market immediately was rejected the next day. A close below an open is not very good. And then generated a sell signal, and this was very, very wild. If you guys don't remember, I'll take it down memory lane. This was a really strange environment. We've never traded in this type of volatility. Look at the bars ranges here. Look at the bar ranges there. Very similar in nature. We're still in a daily sell. So again, I want to tell everybody, using the indicators and using the person's indicators combined with the tools that we have can help us make better trade decisions. And that's all I mean, I'm just pointing it out in this content. If we have information that suggests that the market right now or any stock is still below its monthly opening range, the odds are the high for that stock is in, and therefore any retest of the highs might offer maybe some selling opportunities. What's a retest of the high? Hopefully today was not a retest of the high. Could a retest of the high be 350 in the SPY before another wave down? Yeah. Could we consolidate a little bit? Yes. All I can tell you is, what did we create these indicators in the person's package for? To help us look at momentum change in volume? Beautiful. To help us with advanced decline analysis? Beautiful. To break down the AD line? Perfect. And therefore, I think that for whether you're an equity index trader, whether you can take a look at the Qs and say, gee, how does the Qs look today? By the way, before we get into that, every single stock index that you see on the board is still in a PPS sell signal, right? Every single one. The Dow was looking a little more wholesome as an uptick, but I don't know what tomorrow's going to bring. Every single stock index is below its monthly opening range. The odds are, this presents a detailed information that the odds are the high for the month might be in until we get something that changes or alters that. And what would alter that would be maybe a bullish pattern like a high close doji, a weekly buy signal, a daily buy signal. Let's at least start with a daily buy signal. All right. So I think we had, just to go through one other item here. I've covered this many times before, and I did have someone that asked me, how do you run scans for monthly signals? We didn't create an actual monthly signal. We have daily buys, daily when the weekly's in a buy, plain out daily buys, unfiltered. And what I like to do, if you wanted to look at a high close doji for the week versus a high close doji for the month, you can do, and if you go down to format here, and this may be hard to see, and I apologize because of the resolution on this HD high def monitor, but if you click where it says JPSC HCD, and if you see the positive box, the arrow right there, the box, and then look where it says interval, and you have weekly. If I drop that down, TradeStation allows me to change that, and I can go monthly. So if you're looking for monthly buy signals, and now I can hit run. If you're looking to see how many, even though it says weekly, you're just running this once a month. That's the reason we didn't create a monthly, because you only do it once a month. And the odds are, what do you need for a high close doji? You need a trend that's been down for multiple months. So the odds of getting a monthly high close doji, you need multiple months of downtrend. So the odds of doing that scan and tying up real estate on your screen, it's not worth it. Versus you have the ability to run scans for monthly high close dojis, and you have the ability to do low close dojis, by the way, by just that simple changing of that tab. So same thing works. I'll do it again so that you see. Click on weekly, go over to where it says JPSC low close doji, go to the plus box over there, expand it, and you says weekly, the drop down menu, and just go to monthly. And I can run scans and find out how many monthly low close dojis we're getting. Now, that's probably in this environment, that's probably over the next few months, the scan we're going to run, because what has the market done since, say 2011? It's kind of gone up a bunch. So if there is a condition, and what is a low close doji? It states after a long uptrend, then a doji forms. The market closes within 3 bars of that doji, closes below the low of the doji, you're going to generate low close doji on a monthly scale. So therefore, you can actually run that scan, low close, high close, PPS. Nonetheless, you can run those scans and just change the criterias. If you want to find out how many single outright buy signal, monthly buy signals there are, just the same thing. This is JP scan number 4, suggests just to go to format. All you have to do, same thing, change it from daily, and then change it to drop down menu, monthly. And then you can find out how many new fresh monthly sell signals. Now, again, you can do that and run that in different markets. We have created that monthly signal already, and monthly LCDs on the radar screen. So you can already see that was created so that, but again, this is limited on the radar screen to the S&P 500 and a few select stocks that you may want to add. We have a, let's see, what's blinking here. At the end of September, and this is spooky because September just started, but biotech is generating a flashing warning signal. If we close here or lower, we've got a low close doji for the month. We have the significant time frame or statistic that shows in this time frame that the odds are that the high for the biotechs is in for the month. So not only do we have a weekly sell, we have the first 5-day rule. The relative strength got bad and ugly fast. Biotech, which is really bizarre, you would think, I would have thought it would have done a lot better with this COVID-19. Volume stinky poo, relative strength, momentum, everything else stinky poo. If it's looking stinky poo on a weekly basis, and then you have your first 5-day time frame, odds are the high for the month is in. And we can use, just in case we're wrong, something called a stop loss. So how neat is that? But at least we know in this environment right now for the next at least 3 weeks that we probably want to refrain from buying biotech dips. Dips in biotech, probably not good. Unless that weekly sell signal is negated, the odds in biotech, the odds are that the high for the month is in. Time will tell. We'll see if it's helpful at the end of the month. We can always go back and review this video. Anyway, I hope you guys enjoyed today. If I seem to be abrasive in my typical self, I was being more of a tough lover to make you think, be accurate. You know, a couple little things to leave you with. Greater than is not equal to. It has to be greater than, not less than, not equal to. Greater is greater. Even if it's 1 penny, it's still greater than. A computer, if it's generating a system, in other words, if I'm telling you the close has to be greater than, the close has to be greater than, it doesn't mean the market traded and then 15 minutes later came through it. I said the market has to close greater than. That's what generates a signal, the close. Almost every form of technical analysis is based on the close. So if you use stochastics, a MACD, if you use any form of an indicator, even a moving average, it's based on the close, unless you've programmed a moving average to say, give me a moving average of the highs. But most indicators and most tools are based on the close. So why are you trading and not waiting for closes? That's what the world needs to understand. You know, you can guess how many times do we see markets probe and probe. Look at today. Look at the setup today. If you were in the live trading room on Tesla, if you bought, I actually even gave this example. If you bought the high, the first test of the high, it cost you money. If you bought the second test, it cost you money. But once it closed greater than the last conditional change, it went straight up, immediate, no heat. Now, you could have bought the PPS buy signal. And by the way, here was since I lined that trade set up earlier today, this was a PPS sell signal, a new one. It was also a little low close doji. It closed above that, blah, blah, blah. This closed greater than, blah, blah, blah. But the point is, whether it was this little minor breakout, was the close finally greater than that line in the sand? And the answer is yes. It generated a PPS buy signal. I mean, I'm sure you could have guessed and bought it earlier. But when I gave a setup earlier today, I was showing, I believe on, it was the buy signal on Tesla. For whatever reason, we were using Tesla on Thinkorswim. Let's double check Thinkorswim real quick, because I think it was a bar earlier. 10 to 1 or the other. Change this over to, what does 10 to 1 or the other mean? One day, and this is the setup, by the way. This was, it mirrors whatever I wrote on that computer is on this computer. So here is your setup. The last conditional change, I actually took the time to put that dashed line in green for the trading room so that people could see it. That last conditional change, if you bought it, if you bought it thinking the low was in, you took some heat. If you bought it and you said, hey, great, then you took more heat. If you bought it, it didn't break out, you took a little heat. When you finally bought the breakout of that last conditional change, no heat. The market went up, you made money. So again, the last conditional change is a very important integral part of the market. And I just wanted to also, and I know I already covered this, but the open close relationship on the breakout, and that's why this little red line is here. I said, if the market breaks out, it has to close, not trade. How many times have we seen markets trade through the resistance only to fail? They suck people in. It needs to close above a line, close greater than, not equal to. So I just want to make sure that we all understand that. And then my breakout method is real simple. Once it closes, your stop goes below the bar that got you in. That's the low of the bar that gets you in. And so there's your initial stop. Really simple stuff. I hope. It's simple to me because I've done it for 40 years. Let's see if it's if I could communicate to you that efficiently. Don't misunderstand the difference between close greater than and trade above. There's two separate, distinct things. Anyway, thank you all very much. That does conclude our time together. I hope you found this okay, and we'll see you in the live trading room next time. Thanks for joining me here for this month's PUG meeting, and we tried to answer some questions that were more. And again, I don't mind anyone asking any question. I just want you guys to try to help you to think through the question and look at the details. That makes you sharper. That makes you better, more astute. And I guess I could do it in a better way. But anyway, it is what it is. Thanks, everybody. I'll see you tomorrow.